Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, good morning.
Good morning.
I think it's possible that we get closer, very close to the all-time high today. I mean, it's 1% away, right? I mean, so for all practical purposes, already there. But the late surge yesterday, the last 1 hour surge, really took us within 200 points of it. That's 1%. Well, you know, overnight cues are positive. Once again, you've got sharply lower US yields. This is the way you want market interest rates to head. And that is exactly what is happening. You've got a repeat of what we saw the day before. Yields are down. Look at that. I mean, 9 basis points on the 5-year, the 10-year down 8, the 30-year down 8. Yields are down. The dollar is down. And equities, especially tech stocks, NASDAQ, went up about 1.5% once again. So the rally in the US continues. The SGX is indicative of a flattish kind of start, similar to what we had yesterday. But as I said, you know, the impulse is to buy the dips like what we saw yesterday towards close. Good morning, guys.
Hi, morning, Prashant. Morning, Nigel.
Morning.
And the momentum could continue, right? I mean, you saw it in late trade yesterday. The market was doing nothing through the day.
Yeah.
But that little bit of a pickup is what took the Nifty at that 18,400 mark. So we are just inches away from all-time highs, about 1% away. And the Bank Nifty is the one that scaled a record closing high yesterday. So do keep an eye out on that. Over there, the momentum could perhaps continue. And even global markets, I mean, the Dow was up in the green, about 60 odd points. You've had Walmart that's gone ahead and raised its outlook for profits in 2023. So the consumption data over there will be keenly watched out for. At the FI desk, flows have been muted for the last couple of days, just cooling off a little bit as perhaps this market is in the consolidation phase. At least that's what we've seen in the last few days. So yesterday, FI sold about 220 crores, DI sold 540 crores. But the big thing is that this market is definitely in high momentum. It's a buy on dips market, and it's just a matter of time before we hit those all-time highs. Courtesy, of course, the Bank Nifty, which has played a powerful role in this large rally that we've seen. So maybe not today, maybe not tomorrow, but it's just a matter of time before it comes.
Yeah, I mean, and Sonia, Bhangra, right?
I've been reminded of that several times, you know.
When the all-time high happened. No, I guess we all will, right? Nigel will lead us. All right, you know, let's just take a quick look at how things are. So it's exactly the kind of price action that you want to wake up to if you're long, which is that US equities were higher. Yields are sharply lower and the dollar is down as well. I mean, the oil price also behaved itself. So there's nothing negative of the market price action that we saw. By the way, intraday, you had a bit of a sell-off, but then it came up. We'll maybe talk about that a little later. Momentum is extending mainly because of two reasons. The one is data vacuum. There is not too much data all the way till the 2nd of December, which is a Friday when you get the jobs number, the payroll, the big monthly payrolls number out of the US. So between now and then, there's not very much. There's a lot of Fed speak. There's a lot of Fed speakers who will come and say one thing or the other. But unless, I mean, you know, somebody explicitly says, well, you know, we got to do another 75, press the pedal or something like that. I mean, the market is kind of pricing this in its own stride. The other is calendar. What do I mean by calendar? Investor positioning. I mean, you know, for all practical purposes, you've got a couple of weeks left. When people go on holidays, it always happens at the end of the year. And the impulse generally is to protect what you've made for that year and not spoil your record, spoil your track record one way or the other by doing something foolish towards in the last couple of weeks of the year. So that's the institutional imperative. And because of these two reasons, momentum, because of the calendar that's basically close of the year, and data vacuum, it's possible that these moves can stretch a little bit more out there in the US. Of course, there is a risk of exhaustion, and that is rising as the market keeps going higher, so one needs to be watchful there as well. You know, in data, you had the US producer price inflation numbers which came through. It supported the moves. Numbers are benign, 0.2% month-on-month growth as compared to 0.4%, which was expected. Geopolitics, I mean, you know, there is this news you'll read. There was a missile which landed in Polish territory. It killed 2 people. And there was alarm that maybe, you know, the theater of war is expanding to Poland. But then the Polish president came out and said it's a one-off. Russia denied that it's kind of aimed its missiles towards Poland. I think NATO is getting involved. The market did sell off by about 1%. It erased the gains mid-session, but it kind of came back up on those assurances. Here in India, there was a late surge, which basically took us back above 18,350. We closed above 18,400, actually. Banks, mainly ICICI Bank, is what kind of led the push higher. Nifty is now 1% away from all-time highs. I think we get to that and then we kind of project higher levels, but, it's very close. And the bank Nifty can continue higher towards the upper band of 42,500 or so, which is not very far away from where we are at. If you get a dip, as wait it out, see the market texture, and then maybe take long positions. That's what's worked over the last so many weeks now. I think because yields are sharply lower, watch out for tech stocks, new age tech stocks, etc. as well. These digital themes. That's been the one problem. Cost of capital rising. It's going the other way, and I think that's largely supportive of these kind of businesses, technology/digital kind of businesses. Najil, what are you watching?
Well, Prashant, I'm getting a little nervous because you're telling me as well to get my dancing shoes on. I thought only Sonia's going to be leading the way.
I thought in this group, you're the dancer, Najil. I think we need that.
Why not? If all-time highs, sing, dance, go for it.
The bulls are going to be dancing. Forget about us, right?
Absolutely. Well, the markets actually, we are firmly in bull grip. And there are three big reasons I'll say that. Yesterday, in fact, we did see a late surge. And the kind of strength we saw on that was very, very encouraging. Point number one. Point number two, the India VIX has cooled off to sub 50 now. It's at the lowest we've seen in the last 14 months or so. So that's pretty good news. You always like the VIX to cool off. That's a bullish sign. There's a tailwind coming in from the weaker dollar. And for me, that's a big, big positive for emerging markets and for India as well. Now, yesterday, everyone was wondering, why did we see that late surge in trade? The Nifty Financial Services Index, that expiry plays out on Tuesday. So that, did see expiry play out, and that explains why we did see it move higher. And the Nifty Financial Services Index, well, it includes banks as well as financial institutions. So yesterday, for example, HDFC, it's not part of the Nifty bank, but that moved up in the final hour of trade. HDFC as well did do pretty well. So the HDFC twins and Bajaj twins, both of them don't account for much on the Nifty, but on the Nifty Financial Services, well, they account for closer on 10%. So there was an expiry that played out on that index, explains why, in fact, we ended at the high point of the day. The FIs in the FNO market, well, on the index futures, they added 3,000 longs as well as shorts. They bought some puts as well. But the most encouraging sign is the way they wrote the puts yesterday. And remember, all the calls that were written in the previous session, well, they wrote 60,000 contracts. Yesterday, they unwound 45,000 calls that were written in the previous session. So that's telling you call writing is not working at all. And that's writing seen at the 18,300, 18,400 put. Between them, it added close to around 70 lakh shares. But that's an interesting data point. The 18,300 PCR, that's the put call ratio. It's at 2.5:1. Because just take a look at the open interest on the 18,300 put and the 18,300 call. That's giving you a sense that, in fact, the bulls, they believe that this base for the market is gradually moving up, and that expires tomorrow. So in the near term, that 18,250 odd, you're counting on that holding out. The approach to trade has to be buy the dips. You're getting a bit of a dip today. Maybe you'll get a little bit of a deeper gash during the day. Need to go with the trend and buy the dips, and I think you'll make a lot of money going by what you've seen in the last few days. SGX Nifty 30 points down, maybe a 50-60 point down take will be a blessing actually for the bulls. Sonia.
Oh, absolutely. They haven't really got a big dip, right, to sort of jump into in the last many days. It's largely been an uptrending market. But wanted to point out that there are two listings today. There's Bikaji Foods that lists, and there's expected to be some listing gains. We've spoken to the management in the past that it was decent subscription, about 26 times. And there's Medanta Global Health that will list today as well. So those are the other two big events to watch out for. But let's kickstart the show. First up on the equities front, we have Sanjeev Prasad of Kotak Institutional Equities saying that the Indian market's high valuations would suggest that all is well with the Indian economy and earnings. However, he sees a few issues with short-term growth outlook that may prevent earnings upgrades, interest rate outlook given a high plateau of domestic and global inflation, and medium-term growth outlook from India's high current account and fiscal deficits, which mattered less at lower interest rates. He says India's expensive valuations leaves very little room for disappointment.
Well, let's get you some money market views as well. We have Kunal Sudani of Shinhan Bank, who says that lower U.S. producer price growth prompts inflation optimism. He says bets for smaller Fed rate hikes, sliding U.S. bond yields continue to weigh on the dollar, while China reports an increase in COVID infections. Kunal says risk-off turns into markets on the Poland news and says that the dollar index may find some support near the 200-day simple moving average, which stands at 104.9 levels. For the dollar INR, he says 80.8 to a dollar acts as a support, while 81.5 to a dollar is a resistance.
Okay, and on the bonds, Neeraj Gambhir of Axis Bank says that the market started the week on a positive note as the India October CPI came in line with market expectations, For the rest of the week, he says the market will take cues from the US retail sales and the PPI data on the global front and demand in weekly auctions on the domestic front. He expects the 10-year benchmark bond yield to trade in a range of 7.2 to 7.3% for this week.
Well, we have a lot of stock-specific action as well to track today, and we'll get to that in just a bit in our special Top 10 segment. We'll look at Hindustan Zinc, Vedanta, Apollo Tyres, BEL, TCNS Clothing, Escorts, as well as IRCTC. There'll be stocks in focus on the back of positive news flow, while you have Sapphire Foods, Nycam, and Fusion Microfinance. That are stocks that are likely to open up in the red.
Okay, we've got a special voice joining us, global voice joining us now. Lawrence Belanco of CLSA is joining us from the sidelines of the 25th annual CITIC CLSA India Forum. Lawrence, great to have you with us here on the program. As always, appreciate your time. You know, you in your latest report have put out a framework to think about markets into 2023. And you're basically saying that this rally may extend a bit longer on the upside. But that's likely to fade as we begin 23. So in a way, almost a repeat of what we've seen earlier this year in 2022. I mean, the markets did well before peaking out, topping out in January of this year. Your thoughts?
Yeah, definitely. I mean, the work that we've done here, we saw sentiment extremes into the October lows, as well as a number of market divergences that has led to the current rally that we've seen play out across global markets. And our work that we've done on our cycles into 2023 does suggest that we do overshoot the upside, and we think the S&P can trade above its 200-day moving average. And the Nifty on the back of that should trade to new all-time highs, and we get an upside target closer to the 20,100 area for the Nifty into the first quarter of next year.
Hey, that's a bullish view, Lawrence. Good morning. So you're saying 20,100 on the Nifty by the first quarter of the next calendar year. That's not too far away. Do you think the support of the market has moved higher now, the base of the market? And if yes, what could the floor be over the next, say, 6 months or so for India?
Yeah, so if we look at the Indian markets through the first half of this year, we found that support around the 15,500 area. And we do think that's shifted up towards the 17,000 to 16,900 area. So that should be a sort of a key floor heading into the first quarter. I wouldn't expect to retest that until the sort of second quarter of next year, where we do see markets coming under pressure again. So I think, you know, the floor's in place after we tested that in October. That support level remains intact around the 17,000 into the first quarter.
Okay. Hi, Lawrence. Morning. You know, something that works for emerging markets as well as for India is the currency moves. And the dollar index, well, it went to around 115, collapsed to around 106.5 odd. Has it made the peak out there for the dollar index and the Indian rupee as well? Where do you see that one headed?
Yes, I think one of the key setups that we're looking for into 2023 is a more significant top in that dollar index. So in the near term, there is support between 103 and 105. It's basically the 200-day, but also the 2017 and 2020 highs for the dollar index. And at some stage in the second quarter, we do think the dollar does get a rebound, but that rebound forms a lower high, and that's part of the topping pattern that we see for the dollar in 2023. And ultimately, towards the end of 2023, we think the dollar index is trading back towards 95. And that should put the Indian rupee back towards 75 towards year end of 2023.
Sorry, repeat that, Lauren. You're saying dollar stays under pressure now. It jumps again in starting the Q2 of 2023, and then is back to 95 by the end of the year, next year.
That's right.
Right. Lawrence, you know, the last time we spoke, you were more cautious on India, I remember. Is it momentum which has forced you to kind of change your view? I mean, what are you looking at for these forecasts? Is the basic underlying reasoning?
Well, it's not quite right. I mean, we had markets falling back to the 15,500 the last time we spoke, and that's where we got more constructive once we cleared the 200-day back in July. So what we see now is the trading range that you've had since January, breaking above this 18,500 area gets us that upside target of 20,000. And then looking at the momentum indicators confirming the current recovery in global markets, but also in the India market.
Okay. Coming back to this big target that you've put out, right? 20,100 on the Nifty by the first quarter of the calendar year. Where do you see the leaders emerge from? Will it continue to be banks, which have been front foot forward up until now? Or do you think technology could come back into action?
No, we definitely think we stay on the banks being the key leadership group for the market. But if we had to get more granular within banks, the key sector is actually the public sector banks. So if you look at a relative chart of public sector banks versus the broader banks index, you'll see that public sector banks underperformed from 2010 all the way down to the 2022 lows. You've got a big base there. So we think within banks, while the broader sector leads, public sector banks is the key leadership, but even within the leadership group. So that'll be a key message getting across that public sector banks lead here.
You know, Lawrence, the last time we chatted, you gave us a sense about the breadth of the market as well here in India. That's the mid-cap and the small-cap indices. Where do you see those indices moving? In the last couple of days, the breadth hasn't been great. It's been more the big boys that are moving, and that's where the Nifty is moving up. But any levels you're tracking on the small-cap and mid-cap space?
Yeah, you're quite right. Both mid-cap and small caps are consolidating here. We think into January that they will play catch-up, so we'll see some rotation out of the larger cap stocks as they get extended. But in the near term, we think the action, driving us towards the 20,000 is going to be more driven by the large cap names, and the small and mids will play a bit of catch-up at a later stage.
Lawrence, dollar weakness is great for emerging markets. Where does that leave, markets like China and China-related assets? I mean, Hang Seng, for example, has been rallying. Off its lows last month, it's up some 25% already. Do you think as we head into the next year, there is one market which could surprise on the upside?
Yeah, so we think HSCR, for example, can trade back to 20,300, so another sort of 67% upside on this initial recovery. It's quite a common tendency into year-end that lagging markets do get a bit as you get portfolio repositioning, and obviously with the catalyst and some of the policy changes that you've seen there, we do think that the risk is a surprise on the upside. But at a minimum, we think the HSR can trade back to the 20,200 to 20,300 area.
Okay, one final question then. You said that public sector banks will lead from the front or will continue to lead in this market. What else? So where do your preferences lie on the charts? Do you see Reliance Industries come back in a big way? Is technology going to make a comeback of sorts?
Yeah, but the banks are still a key focus. Outside of that, we think you should be taking profits in the fast-moving consumer goods space, as well as the autos. Autos had a great first half of the year, and we started to see that upside momentum slow there. We think there's some selective opportunities in the technology side, but that's not going to be the leadership group that we saw off the 2020 lows. That's all focused on the bank side.
Commodities, Lawrence, did you touch upon that? Oil, metals, what are we to make of those? And what are your forecasts?
Well, so our base case on the broader commodity side is that we think we're in the secular bull market, and we think that will continue to extend. And if we correct in our view of a dollar top, we think that dollar weakness will also support further re-rating on the commodity side. Recently, we've seen a breakout in gold that we think we can trade up to 1880 there. We've got longer-term upside targets of 2150. As far as Brent goes, we think we're in a holding pattern basically between $88 and 123. And in the short term, you've got a base forming above that $88 to trade back towards 113 to 115. So, trading range is the worst case scenario we see for commodities. But within that space, a general uptrend we think continues to play out.
Okay, have a great conference, Lawrence. Thanks a lot for joining in and giving us your thoughts. That's the word coming in from CLSA. They're quite optimistic. They have a 20,100 target on the Nifty by the first quarter of the next calendar year, and they continue to be bullish on banks, especially PSU banks. Let's slip into a quick break, but our entire team will be joining in next to help us with the top stocks trade. Every morning we wake up thinking that this is the morning when the Nifty is going to hit all-time highs, but our patience is definitely being tested. Muted is what the SGX Nifty is suggesting, but not too far away from all-time highs in any case. Our team is here to help us prep for the day. There are plenty of stocks to talk about. So let's go straight to that. Nigel, you're watching Hindustan Zinc and Vedanta today.
You know, those shareholders, they wake up every day thinking, what's the dividend? Because that's really the big play for Hindustan Zinc as well as Vedanta. Now, to run you through the news, the board meeting is scheduled for later today, and they'll be considering the second interim dividend. We already know that Hindustan Zinc has already paid out one dividend. That's to around 21 rupees odd. That was earlier this year in July 2022. In terms of their net balance, the cash balance, well, they're sitting on a hefty one, close to around 16,000 crores odd. So it'll be interesting to see what is the quantum that you pay out. And we'll also be looking more at Vedanta, because Hindustan Zinc, the float in the market is effectively only 2.5% or thereabouts. But Vedanta will be the one you'll focus on, because it receives the dividend from Hindustan Zinc, and then the street will be waiting by for the Vedanta group to pass that further on to its shareholders. So both these two stocks will be in focus today. But Sonia, Apollo Tyres, good set of numbers. What did they say in the con-con?
So the conference call was at 4 p.m. yesterday, and the takeaways are quite positive. So I'm going with green once again for Apollo. They've guided for 20% growth for the standalone entity, which is focused on the Indian market. And they're saying that this is driven by a very strong pickup in commercial vehicle replacement demand. Not just that, the OEM replacement demand is also sustaining, and that's something that will drive growth for them. They've already taken a 5% price hike in the replacement segment in India, and overseas they've taken a 5 to 12% price hike in both the passenger radial tires as well as the truck and bus radial tires in Europe, and that's important. That's the reason why Europe has done well for them despite all the challenges there. The only issue for Apollo Tyres is the rising debt. So the consolidated net debt, they said in the call, is 5,500 crores, which is a niggling worry. But other than that, 20% growth guidance for the standalone business is something that the street will appreciate.
All right, Apollo Tyres stock was in focus yesterday as well. Now, Bharat Electronics, defense name, lots of price action recently. Vahisha is standing by with more on that name. Vahisha, hi, good morning.
Hi, Prashant. Good morning. Well, Bharat Electronics has signed an agreement with Yantra India, which is a defense PSU, for cooperation in the areas of ammunition, hardware and military-grade components to jointly address the requirements of the Indian defense and the export markets. They have also signed a deal with the US-based Profense for cooperation in the manufacturing and marketing of light weapons. Also entered into a pact with SVC Technology Ventures for manufacturing and marketing of heavy-duty blast doors. A memorandum of understanding with Hindustan Shipyard to carry out joint development and product upgrades of identified products and systems. All of these are positive news flows, going with a green here.
Okay, all right. Thanks for that, Vahista. Well, Mangalam joins us to tell us about Sapphire Foods, where that lock-in expires, and IRCTC con-call takeaways here again. Mangalam.
Well, for Sapphire Foods, expect the stock to be in a bit of a red today because of the supply overhang that comes in. The stock ended at the lows of yesterday's trading session itself. Lock-in for pre-IPO investors ended on November 15th, so which says that from today, which is November 16th, these investors can go ahead and sell as well. Yesterday as well, the volumes were almost 2 times the 10-day average. So let's see what happens today. The stock already has corrected 15% from its 52-week high. As far as IRCTC is concerned, the stock was lower yesterday, but post-conference call, the management did say that they had plans to get additional revenue by procuring the tenders of retiring room upgradations in the railway stations. They expect traction in the internet ticketing business to continue. At the same time, for catering business, they've given a guidance 1,500 crore in terms of revenues. However, it will be interesting to see how margins pan out in the catering business. They will operationalize 2 rail near plants as well, which did about 75% growth in revenues, and the management would focus to achieve more revenue coming in from tourism business. So all around positive comments coming in. Let's see if there would be buyers for this one.
Okay, positive commentary over there. Let's go to Vivek now. He's tracking some block deals that took place. Vivek, over to you.
Well, 2 stocks in focus on the back of fund action or block deals, as you put it. First on the list is Nykaa. Now, Nykaa actually saw some significant fund action yesterday. Hermes Investment Fund bought almost 25.8 lakh shares in the company, and Siganti India Mauritius was the seller. They sold close to 33.7 lakh shares. Remember, yesterday Nykaa closed down quite sharply, and also now what's important to note in Nykaa is the bonus shares have actually been credited, so that too is available for trading as far as investors are concerned. On the other hand, Fusion Microfinance, that was one particular stock yesterday that saw a weak debut. Some funds did buy in, Massachusetts Institute of Technology being the notable name amongst them. They did buy 5.5 lakh shares at 339 rupees a share. However, these shares were bought, and the other funds too actually bought shares at a price lower than the actual IPO price.
Okay, all right. Thanks for that, Vivek. Well, let's hop across back to Mangalam. Mangalam, some reports indicate that TCNS is on the block. Nisha alerted us earlier as well. Go ahead.
That's correct. So TCNS Clothing is what the news reports indicate that is on the block, and there are a bunch of buyers for that. There is Reliance Retail, Nykaa, Aditya Birla Fashion, and Trent, all of them showing interest in buying TA Associates 29.24% stake in the company. TA Associates, of course, is a private equity which is also the promoter of TCNS Clothing. Reports also suggest that there are a couple of private equity players in the fray. We have TPG Capital and Advent International interested. This obviously is the company that owns women's wear brands like W and Aurelia. At the same time, CNBC-TV18, like you pointed out, had reported in August itself that the company is on the block. However, on this report itself, we haven't verified it independently, but it is an addition to what we had reported earlier.
Got that. Thanks a lot. We're also watching out for Escorts. Now, on the 8th of this month, the company announced that they would be hiking prices of their farm equipment business effective today. And we don't know the quantum of the price hike, but this comes as a positive for the company because they have been dealing with a lot of margin pressure in the last many weeks and months. The quantum of the price hike perhaps could be announced today as well. In Q2, if you look at, just go back to the numbers, the material costs were up 650 basis points year on year at 72.4% of sales. So they couldn't really pass on the higher material costs to consumers, and they will be doing that starting today. The margins were under pressure as well. So the price hikes are imperative to help the company get back to double-digit margins. Just a quick look at the margin picture. About 5-6 quarters ago, the margins of the company used to be at around 14% and now it's not negative margins, but the margins have fallen to about 8.1%. So just keep that on your radar. But let's do a quick recap then of our top stocks with positive news flow. There's Hindustan Zinc, Vedanta, Apollo Tyres, BEL, TCNS Clothing, Escorts and IRCTC. While stocks with negative news flow, there's Sapphire Foods, Nykaa and Fusion Microfinance. But also, let's go straight to Manisha to find out what all is happening in the world of commodities. Manisha, good morning.
Morning, Sonia. It's been a good going, actually, for the bulls here. The crude oil prices gained 3% overnight, while, of course, the Poland missile is being debated about. But the oil supply to Hungary via the Druzhba oil pipeline also has stopped due to a low pressure, and that is adding premium to prices. After that 3% gains overnight, we are trading flat in the Asian markets right now, and this is ahead of the U.S. inventory data for crude and distillate products that the markets are waiting for. Good going, though, for the precious metal prices. Gold is still trading at a 3-month highs and silver holding close to those 5-month highs as well. Within the metal space, while the China new home sales declining or the prices declining the most in 7 years is weighing on some of those base metal prices. But steel and iron ore have continued to gain up. Steel in the Asian markets has opened 2.5% on the higher side. We are trading at a 4-week highs on this, and a huge run-up in the iron ore prices as well has continued.
Okay, all right. Thanks a lot for that, Manisha, for stopping by and giving us the quick update on the commodity space. For the time, you can slip into a short break. You come back. We'll discuss a lot of the stocks that will be in focus. Deven Chokshi of KR Chokshi will be joining in for some fundamental stock analysis. And later on, we'll connect with Mr. Srinivasan of eClerx to talk about their past quarter's numbers. Very good morning and welcome back. Well, for starters, in fact, today the SGX is suggesting a bit of a pullback, which is pretty much okay. Yesterday, the kind of run that we saw, actually, let's just pull up the Nifty's intraday chart yesterday. We had a cracker of a close yesterday. At around 2:30, there wasn't much happening. At around 3:30, well, the Nifty was up closer around 100 points or thereabouts. It was fantastic. And the Nifty Bank as well did move well because obviously there was an expiry that played out for the Nifty Financial Services. So that index as well, we have it, should come up for you. So pretty good going on that front. The mid-cap index, though, that's showing some bit of, a lag in its performance. The last few days, that's been the case. Yesterday as well ended as flat as can be. Well, the frontline index had moved up. But as promised, Deven Chokshi of KR Chokshi joins in on the show. Hi, Deven. Good morning. Well, metals have been doing very, very well. I wanted your view on the space. This could be a perfect opportunity to get off the bus if we were sitting on some of those stocks, or if it's going to be actual that recovery in China, the dollar index cools off, then you could be in for a better ride. Which camp are you in?
So good morning, Nigel. I think it's always very difficult call to take on commodity on every momentum basis. I would believe that I think local demand scenario remains extremely strong and convincing. So from that perspective, Indian companies are very much at home as far as I think their business outlook is concerned. The global scenario, I think, still not completely sure, but at the same time, I think having seen the correction of a sharper degree in the metal commodity prices, it's very natural to see, I think, some kind of a bounce back taking place into the commodity prices. And that's what I think is being experienced currently. If this situation sustains, then definitely I would think that I think the worst probably seems to be over for most of the macro commodity stocks. Maybe I think what we have seen is the worst ever performance in the last quarter from these companies. Probably going forward, I think the situation remaining more conducive, demand scenario remaining strong, and at the same time, I think the cost pressure, the margin pressure, I think is probably remaining relatively lower comparatively. I would think that I think the metal commodity stocks have a reason to bounce back. So probably I think one can ride the momentum at this point of time and play it, I think, for next 2 quarters.
Okay. Deven, hi, good morning. There are two listings today. There's BKG Foods and there's Medanta or Global Health, right? Both of them are expected to provide some listing gains and both of them are good companies. But would you buy, from a retail investor standpoint, would you buy either of these names post-listing for the long term?
Yes, Sonia, good morning. BKG remains, I think, extremely promising. I don't know how much would be the listing upside, I think, that one is talking about. From the grey market premium also, I think one is not very sure whether I think there is going to be a selling pressure coming in post-listing. But on the whole, I think the stock remains promising from the business standpoint. And that is where probably I would like to see the corrective price, if at all, I think during the post-listing, if it happens, that would be an opportunity to buy into the stock. Maybe this is not immediate story. Maybe one will have to hold it for at least 1.5 to 2 years minimum, after which I think one should start getting reasonably good amount of upside into this particular stock. Largely because of the fact that I think the valuation at which I think it is getting listed, in my viewpoint, I think probably the upside is limited relatively, I think at least in the near term. But still, I think given the strength of the fundamental, if any corrective downside in the stock price, I think would be a buy opportunity.
Another, Deven, hi, good morning. Stock which has seen a correction is Campus Activewear, which sold off 10% yesterday, but bounced about 5% from the lows. Yesterday on D Street Chatter, Nimesh was also telling us that there is some accumulation by HNIs, etc. At least as a feedback that he got. Any thoughts here, Campus? I mean, 100% it will see earnings downgrades for the full year. The question is how much of the price damage is accounting for that? Your sense?
No, Prashant, I think I'm sorry, I have not been tracking this particular company, so would refrain from putting any idea on that.
Okay, no problem. What about these, names like RVNL, Railtel, once again saw 6, 7, 8% kind of moves. Are these just momentum-fueled gains, begetting gains? Or do you think the story is changing really, Deven?
Well, I think the story definitely, I think, remains absolutely strong as far as I think the railway stock goes. Maybe the kind of demand scenario which is emerging from most of these companies is definitely remaining very promising. Always, I think, one question that I ask about these companies and their management, about the sustainability of the margins. Maybe I think that is one area where I'm not getting always very high comfort. But given the situation that in which I think the order book size is growing, sales revenue is growing, probably the profit as a whole will grow. Profitability, per se, I think is something which I will keep my observation on at this point of time. Currently, the momentum is on, and I would think that I think this momentum will continue. So those who are basically trading these counters from the momentum point of view, for them definitely I think this opportunity is there. Already the stocks have appreciated. I would think that I think there should be headroom further into the stocks, given the kind of positive news flows that they are attracting.
Okay, Deven, stay on. We have, a company in the mid-cap IT space that we're going to track now, and I would appreciate if you listen to it and give us your views. eClerx is the company we're talking to. Posted a good set of earnings. The constant currency revenue growth was strong at 4.6% sequentially and nearly 22% versus last year. The margins of the company have also expanded, and it's a decent run. In the last 1 month, the stock is up 10%. eClerx also upped its guidance going forward. We have Nadadhur Srinivasan, who's the CFO of the company, who joins in now. Mr. Srinivasan, good morning. It's been a stellar 20% plus growth that you've seen in the first half of the year. Just trying to understand whether the second half will be slower given the furloughs that are typical in Q3. And there's also perhaps some slower decision making because of the challenging macro environment. Do you think it would be tough to maintain this 20% growth?
Good morning, Sonia, and thank you for having me on the call.
Sure.
So we are an IT ES company, so furloughs don't matter as much to us. But having said that, the second part of your question does make a lot of sense. So we do see macro uncertainties, and it's kind of going to be difficult to maintain this level of growth for the next, consistently for the next 3 to 4 quarters.
Hi, Mr. Srinivasan. Good morning. If there are macro uncertainties and you'll have to tone down this sort of pace that you're growing at, then what should be the realistic number? If you could give us a broad range. And also, I wanted to quiz you about your margin guidance. As per going by what y'all are saying, you'll upped it by close to 200 basis points. How much of that is currency related?
Our margin guidance for EBITDA has always been in the 28 to 32% range. And in Q1, we came at the lower end of the range, and that's typically because of the increments which happened in April. And in Q2, we have come to the midpoint of the range. And I think even in Q3 and Q4, we believe that this range for the full year should be possible. There's a little bit of depreciation effect in that, because we get in Q1 about 15 crores of revaluation income, 18 crores in Q2. So there is that. But however, even if the rupee were to remain flat for the next 2 quarters, I don't see an issue in maintaining or meeting these margin numbers.
Okay, Mr. Srinivasan, good morning. Sorry, on growth, did you put out a number, if you can? You said H2 will, I mean, it's tough to grow, understandable, at that same pace, but where will you end at in FY23 on revenues?
So we think middle teens should be possible. I think at the moment we have done in constant currency terms about 4% in Q1 and 4.6 in Q2. If I extrapolate that and bake in a little bit of slowness, then maybe 12 to 15% should be possible.
Okay, 12 to 15% growth you said for the full year?
Yeah.
Okay, that's for FY23. Are you also taking into consideration how the situation is panning out in Europe? Because 20% of your revenues comes from there. It has not only been very challenging there, there's a massive energy crisis that has played out. Now there's winter as well that's coming through. So this 12 to 15% growth, you think it could be under check if things worsen in Europe?
Well, firstly, the guidance that we have given is on constant currency. So hopefully there's no exchange rate impact on that. Secondly, the client mix that we have in Europe are a mix of luxury goods suppliers who have seen not much of slowdown. And there is a little bit of, we do work for industrial and high tech where there is definitely a slowdown. So all things considered, even if we bake in the 20% of revenues that come from Europe, I think mid-teen growth should be possible.
Okay, all right. Mr. Srinivasan, the other point is, you have constantly been paying out close to 70% of your profits. I think you have a stated guidance that you'll pay out 50% of the profits you'll make. What's preventing you from going ahead and upping this guidance?
So I guess there are only two needs for us in terms of capital allocation. One is to either pay it back to investors in terms of dividends or buybacks, and the latter is our preferred way of returning cash. And the second is to use it for inorganic purposes. And if we don't have any inorganic requirements near term, then we are happy to pay out that cash to shareholders, because we believe that they will have, their opportunity costs are far higher than ours. And any return that we could make will be far lower than what our investors could get out of it. So that is one. And in the measurement period that we took, which is the last 5 years, FY18 to FY22, we had one acquisition. So I guess it's about so in that period, the cash return was 70%. But having said that, had there been more acquisitions, maybe the payout would have been lower. Therefore, we are guiding for about 50%. But in certain measurements period, it could be higher. In certain, it could be a little lower than that.
Mr. Srinivasan, e-clerks has emerged from a rough sort of time, right? Even pre-COVID, growth rates were 0.5%, 1% in that range. And then COVID struck. Now things are improving. Do you think the sort of business model has hit a sweet spot? It's kind of stabilized. you just give us some guidance in terms of how you think about it, because for the full year, you have already put a number which is 12 to 15% top line growth. But in terms of the business model and where things are headed from here, slightly longer out, are you in the right place?
So we believe we made the necessary investments in productizing our services and embedding analytics and technology in the work that we do, having a greater percentage of folks who are onshore and closer to the clients. And therefore, we believe, and these are changes that came on the back of the slow growth in the FY16 to FY19 period. And I think we believe that these things have borne fruit, at least in the last 2 years, and we are hopeful that it will continue to work for us in the future.
Okay, all the best. Thanks for joining us, Mr. Srinivasan, and have a profitable second half of the year. Devin, if you listen into that conversation, there's a 12 to 15% growth that they're outlining for the full year. Margins will be in this range, but there are macro uncertainties. Would you be cautious or would you give it a go?
Yeah, I think if you study this particular company, I think over the last 5 years also, I think they have been average growth company. And even if I think in the current environment where they are facing some amount of challenges, I don't see they are reaching that particular average of around 10-12% kind of a growth on a 5-year cumulative basis. I think that they have been producing. Unless I think there is some distinct improvement in the product business that they have launched. And if that particular business starts generating significantly higher revenue, which we have not heard from the management either, if that happens, then only I think you can re-rate the company to higher level. Otherwise, I think it would be a market performer in my viewpoint. So there are better opportunities available in the space today. Many of the mid-tier IT companies which are having specialization or the niche in certain areas, I think they would remain relatively more stronger bets comparatively as far as growth is concerned. In fact, I think some of the larger IT companies are today showing more visibility of growth with the kind of contracts that they are winning over the next 5 to 7 years. So I think I would prefer to go with the larger IT companies where I think visibility is upwards of 15 to 20% as far as I think their growth model is concerned. So one could possibly stay invested into them vis-a-vis I think some of the companies which have been average growing at a lower end of the growth rate.
All right. David, stay with us. You know, we already put that Bikaji question to you. It will be listing on exchanges, but Mangalam is standing by to tell us a little bit more about the company. It's an interesting company, household name in that sense. So lots of interest. Mangalam, tell us more.
Definitely a household name in all those who like to munch on bhujiyas, etc. But you know, the listing today is likely to be in the mild green. That's primarily because of the demand that we saw, especially in the last day of the IPO's issue. 881 crore issue was subscribed almost 27 times, and most of that came in from institutional buyers, almost 81 times subscription by them. The HNI subscribed by about 7.5 times, and we had retail by almost 5 times as well. It is the third largest snacks maker in India. Ethnic snacks maker has 4 factories, one in Bikaner and one in Guwahati, and their FY22 revenues were close to around 1,600 crores with 7% margins. The key risks for the business is one, strong competition coming in from local brands as well as MNCs. The second one is that raw material inflation. We've seen the impact of that in a lot of the food companies. And thirdly, Rajasthan, Assam and Assam and Bihar rather account for nearly 3/4 of their sales. And how is the company planning to go into other states is something that we will monitor. The management to CNBC-TV18 said during the IPO that it is possible to do revenues of almost 3,500 crores with the capacity that they have, and normalized EBITDA margins are about 10% or in double digits itself. Plugging what the management said and assuming that the company's net profit for the next year actually doubles from what they did in FY22, the issue is priced at 58 times the FY24 price to earnings. So valuations are not particularly cheap. And if it is expected to be in the mild green, valuations are only going to get higher. So that is something that we have to be mindful of.
Okay, thanks a lot for that. Well, what really worked for them is their marketing. Amit ji loves Bikaji, right? That stayed with me. It's just
absolutely
refusing to go away.
That was something that was ringing in your head, you know, when they came here the other day.
Okay, and the son papdi, right? The mithai.
Absolutely. I mean, that's a personal favorite. And that's, of course, I mean, you know, weight issues, right? So for people like me, I mean, it's always a constant battle. Sugary stuff, sweets.
It's called what? Whole wheat bhujia. That's what you go for.
But not quite as tasty, right?
Okay, well, I think all of us are hungry. We haven't had breakfast. We'll do one thing. We'll take a quick tea break and come back in moments from now. Sudarshan Sukhani, Mitesh Thakkar will be joining in for some technical trades. Stay tuned.
Okay, welcome back. You're with us here on Bazaar Morning Call. Let's just look at the SGX Nifty, which was indicating a flattish kind of start. It's 50 points, so not that flat, but 0.25% is all that SGX is indicative of. Guys, all our lives in terms of reporting on news, especially regarding US, is going to get interesting over the next 1 year. You have Donald Trump, who's thrown his hat in the ring once again for presidentship. Elections are still in 2024, so there is full 1 year ahead. But I think this is significant. Between, if you guys remember, 2016 to 2020, right? Of course, he was on Twitter back then, and that was the primary source of kind of him getting to his followers, getting to the public, etc. But that was one crazy time. He's not on Twitter now, and I think, at least to my mind, the question is, a presidential candidate in the US who's been president before, will he get back on Twitter?
Absolutely.
I mean, one would think so, right?
Trying to make America great again, right?
Make America great again. MAGA,
Do all
right?
those dance steps and all that.
I mean, one way or the other, right? It's going to get interesting. By the way, from a market perspective, markets always like a Republican presidency. That's been always true going back decades. So, interesting to watch. He's not, the point is he's in a weakened position. Maybe that's why he's announced the candidacy now, because the midterms, Republicans did far worse than what they expected to do. So people are not throwing in the support for him. But this is Donald Trump we're talking about.
There's also a lot of political vulnerability currently, right, over there, and there's escalating criminal some investigations against him as well. Amidst all of this, here comes that nomination.
Yeah, I think that midterm performance actually is, that's the one that made him push in the candidature. Otherwise, because they were expected to do very, very well, and that came as a road shot.
Rumal dalna, right? you put in the rumal, and you've announced your candidacy. All right, so that's out of the US, but let's bring in our technical experts for some trading ideas this morning. Mitesh Thakkar is with us. Proprietor at earningswaves.com, and Sudarshan Sukhani is technical analyst. Both of them. Gentlemen, great to have both of you back with us. Sudarshan, how are things looking? We got a late surge yesterday, which led the Nifty to end above 18,400, and we're about 1% away from all-time highs. How would you approach things?
Good morning, Prashant. See, if you're a positional trader, which means if you want to keep a Nifty position for days and weeks, and you should be having at least part of your position in that way, then you just hold on to the index. Hold on to a long position in the index, use options so that the value of the option itself becomes an intrinsic stop loss for you, and ignore the up and downs that happen day to day. But for short-term traders, which is the segment which we primarily address, which I am also mostly a short-term trader, the market is giving a sense that around 18,400, 500, it's probably getting a little nervous. So we should be long, but we should now keep a tight position, tight stop loss, and that tight stop loss is yesterday's low, which is about 18,280. So 18,280 is the point below which I think I will close my long position. Till then, I will stay long, and if you don't have a long position, go long because you have a clear stop. Okay. Almost the same view applies to the Bank Nifty, but the Bank Nifty has been a little bit of an outperformer, so you would prefer to have a wide 300-point stop there for your entries.
Got that. So 18,280 is the level to watch on the downside. Mitesh is also with us. Mitesh, the market has paused a bit around these levels. You reckon that the buy on dips is a strategy that will continue to work, or are you a bit cautious now? And what's your view on the Bank Nifty?
Yeah. Good morning. My belief is that buy on dip should work. The idea is that the overall trend and the bias is on the upside. And whenever you get a dip, which is seeing the index come back to support levels, that will be a great entry point. I think we maintained targets of 18,480 and then 18,600. But eventually, I suspect we are getting closer to about 19,000 levels, given a few weeks of time. So in that sense, I think, declines, at least unless we get a reversal signal, I think all declines would be buying opportunities.
Okay, all right. Morning, Mitesh and Sudarshan. Mitesh, you go first. Give us your picks.
Nigel, I have more of buy calls today, despite the fact that the SGX is mildly negative. The first is a buy on IGL with a stop at 425 for targets of 450. United Spirits or McDowell's gave a good breakout. That's a buy. Keep a stop at 890. Look for targets of 940 here. And Apollo Hospitals is the third buy call with a stop below 4550 for targets of 4725. The solitary sell call is Polycab. Keep a stop about 2650 for targets of around 2570.
Okay. Thanks for that. We'll slip into a quick break. We have to come back with the pre-opening rates. All right, before that, Sudarshan, what about your stock calls? What are you looking at today?
Well, Muthoot Finance is a buy. That stock has been having relative strength, momentum in its favor. Keep a stop under 1075. Hero MotoCorp is a buying opportunity. A very attractive bullish pattern is under development. It will take its own time, but I would say go and buy it. Stop under 2675. Metropolis is an intraday short with a stop above 1578. And finally, United Spirits is a buy. The stock has rallied, consolidated, and is now preparing for a second rally. Stop under 870.
All right. Those are individual trades which are coming in from Sudarshan and Mitesh along with the market view. Gentlemen, thanks very much. We'll come back for more a little later. We'll take a break here. We are back with a pre-opening session. Sandeep Sikka of Hindware Home Innovation also joins in to discuss their second quarter earnings. Stay tuned for that conversation.